Like the Fed did what everybody thought it would do. So why was there such a dramatic reaction? Stocks selling off, dollar rallying. And I think that what happens is in the markets, remember what the purpose of the markets is, and that is that they're supposed to be discounting future scenarios. They're like pricing in what's likely to happen. And so what happened in this case is the market thought the Fed was going to be dovish. They bought stocks for the last couple of days. They sold the dollar. And then when the Fed did what everybody expected to do, time to take profits, for the institutional people to take profits. And this is what oftentimes happens, I think, is the retail participants don't have access to the same information. And so when they say, oh, we're going to wait for the Fed to make the announcement, they see the Fed's announcement, they say it's dovish. So they decide to buy stocks or to sell the dollar. And it's just when the professionals are time to take profits. In the markets, we sometimes talk about this as buy the rumor, sell the fact. And I think this is just like a classic case of that. The rumor is bought by the the rumor is bought by the institutional investors, the deep pockets, the smart money. And then the retail comes in a bit later because that's how they get the news. And I think it just is a classic market development. Buy the rumor, sell the fact. It wouldn't surprise me that, for example, the NASDAQ, that's the high-tech stocks, that the real strongest part of the U.S. equities, saw a big sell-off here today, and we closed on our lows. So it seems to me the most likely scenario is something like this. The retail who bought today on the back of a dovish Fed, they bought, institutions sold. And now the small investor, my brother, my sister, are underwater on their positions now. And tomorrow they're going to feel they could feel more pain. The weak close in the US leads to sell-off in Asia, leads to a sell-off in Europe, and then we get a weaker stock market tomorrow. And just when my brother and my sister, are at their pain threshold, that's when institutional buyers come back and begin buying precisely because of what you say. So to me, this speaks to, we talk about the markets, perfect markets being total information that everybody knows. But what happens is there's really asymmetries. It's like the person who buys a used car and the person who sells a used car, two different information sets. And I think the retail investors have one information set and institutions have a slightly different one. I think that professionals like financial advisors would say that don't time the market. They would tell retail investors, don't time the market. Buy companies that are strong companies that you believe in, strong management, strong earnings, and stick with those, and don't be caught up in the noise. There's noise and a signal. The market generates a lot of both. And so the key is to focus in on the signal and let the professionals play with the noise. A lot of times on the retail side, we think that being right is how people make money. And that's a myth. I think that people make money not because they're right more often, but because they're disciplined risk managers. It's not so much about the upside. Everybody does well with a winning stock, but it's how you manage the downside that's the difference between the good and the broke traders. You talk about this incredible level of uncertainty. And so that's the first thing to recognize, is that the course of the economy is going to be highly dependent on the course of the virus. And I worry that people might be getting ahead of themselves. Part of the U.S. political cycle talk about a vaccine in the next couple of weeks. The head of the CDC today, that's the Center for Disease Control, that's the U.S. agency who's tracking this and who takes care of this for us. The chairman of it suggested that maybe a vaccine won't be widely available until the second or third quarters of next year. And remember, we don't have one yet. I mean, there's been false attempts. I mean, we don't have a vaccine for the common flu, for the common cold. There's the Dang River that causes blindness, and they don't have a vaccine for that. How many millions of people have died from malaria, and there's no vaccine for that? And so I worry that we're getting a bit ahead of ourselves. So the first big unknown is about the COVID itself and the virus and its evolution. As you say, as we get ready for the winter in the north, it's also flu season. And I know some people think that the masks that we have to wear for COVID will help stop some flu spread. But that's sort of like a hypothesis that's optimistic, and we'll have to see how that pans out. I think that one thing is not so uncertain, and I think that's what does the election, the U.S. election, mean for the U.S. stock market and the dollar? And I kind of suspect that the forces that drive the dollar and drive U.S. equities are much bigger than who occupies the White House. And so I think that monetary policy, it seems quite clear. Today was the last Federal Reserve meeting before the election. And the Federal Reserve is very accommodative. And I think that the Federal Reserve is assuming that one way or the other, there's going to be some fiscal stimulus coming after the election. And I think we can count on that, whether Trump gets reelected or Biden gets elected. I think we're going to get more fiscal stimulus. So investors should be able to count on that. And I think that, but another degree of uncertainty, of course, is how the world responds. And I mean, if Trump gets reelected, what happens? How does the world see America and see the dollar? And will this just expedite people's desire to look for an alternative to the dollar? I think the U.S. dollar is going to fall regardless of who gets elected, because our monetary policy seems to be independently by the Federal Reserve. Fiscal policy is going to be more stimulative. And I think that what people have become concerned about, the next concern or worry, is what we used to call the twin deficits. The large U.S. budget deficit and the large current account deficit requires the U.S. to offer higher interest rates and have an economy stronger to justify the higher interest rates. We don't have that right now, and so I think the dollar is going to fall further.